Hello everyone, welcome to Options with Doug. This is my live daily stream on Bookmap Discord and the Bookmap YouTube channel that begins at 1:30 p.m. Eastern Time. And before I go any further, let me go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, my presentation and the Options with Doug channel in Bookmap Discord is very focused, and the focus is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action in futures and stocks. I have a two-step process for trading, and the first is planning, and I use positional analysis, and I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected range and volatility for the day, as well as a directional bias. And I think that is a new, different way of looking at the market as opposed to other approaches that many traders use, like technical analysis and fundamental analysis. And the second step in my process is execution. And I look at real-time order flow in Bookmap and market maker hedging flow in Spotgamma Hero, and this is also real-time, to confirm my thesis and to find setups for the day. And on-topic questions and comments are welcome. And I will be watching chat in the Options with Doug channel in Bookmap Discord, as well as the chat in YouTube. Okay, so that's out of the way, and let's get started. So today I want to, on my agenda, the things that I want to cover is first go over position analysis, and that's for the S&P 500. And then I'm going to talk about the 3835 strike. That is the currently the SPX call wall, and that is also happens to be the short strike of the JP Morgan collar. So that's the short call strike that expires today, the end of the quarter, end of the year, 12/30. And I've talked about that all week, and we'll wrap that up today. And then I want to review the ES SPX price action yesterday, and we'll take a look at what Spotgamma projected in the founder's note yesterday and how the SPX levels came into play, influencing price action in the S&P 500, ES, SPX, and SPY. And then finally, we'll take a look at some setups. So let's go take a look at Bookmap. And this is the S&P 500 futures, ES. And the support and resistance levels that are in play are shown on this chart. And I have two columns of cloud notes. The first is Spotgamma cloud notes, and these come directly from Spotgamma. They're updated daily, and there are two types of levels here. One is levels based on the SPX alone, and those levels are converted to equivalent ES prices. So right now, Spotgamma is adding 25 points to the SPX to come up with an equivalent ES level. And an example of that would be the put wall here. That's the SPX 3800 put wall, and that was noted as support in the AM Founders Note, and I marked that in my Cloud Notes column. So in that column, I marked the support and resistance levels that are noted in the AM Founders Note, as well as SPY key gamma levels, and then also ES big round numbers, the zeros and the 50s. So that's what I'm showing here in these notes. So the support and resistance levels are again noted in the AM Founders Note. So the support level that was in play today was the put wall 3800. And just by the way, does anybody know what and there's a question for me to turn up my volume. Is this better? Is anybody else having difficulty with volume? And let me check on YouTube. Okay, David, hello, glad you're here. And so I've got one okay for volume and then another low sound. So as far as I know, nothing has changed on my end. Let's see if there are any more comments. Okay, so mostly on Discord, I'm getting volume is good. There's, I don't know of any way to turn up my volume on the microphone. So I've got the microphone right in front of my face. So okay, so I think it's okay. So just does anybody know what happened here right at 1:15 Eastern Time? This big drop, was that news? The only thing that I could see was where's that? This right here, news about the Fed reverse repo. So that's the only thing that I saw. And there's a question, did the UK session closed? And the UK session closed earlier. That's my understanding. The last time I checked the 24-hour market clock, European markets closed at 11:30 p.m. Eastern Time. That's my understanding of when they're closing. So anyway, this is the only thing that I saw, and it could be low volume, thin pre-holiday trade combined with any news about the Fed. So again, this is all I saw, but it looks like ES went down just below the put wall, 3800 put wall on the combo L2 level, and that combo L2 level is a combination of SPX and SPY levels. So price dropped quickly to that level and then reversed back up to the 380 SPY 380 put wall, and now is dropping down again. So it looks like this this 380 put wall has been in play today, and then now the 3800 put wall. So the SPY put wall and the SPX put wall. And most of the volume is concentrated so far today for the session between the really this combo L5 level and the volatility trigger, and that is the SPX volatility trigger at 38.25, which lines up with the ES 38.50. So pretty much a lackluster day in the S&P 500 today. More of a range day, chopping back and forth. Now regarding shifts in levels, so those are the levels that are in play today. And regarding shifts in levels, the SPX put wall, if you recall yesterday, dropped down to 3,700, and it jumped back up to 3,800. And then also the SPY put wall, as well as the key gamma strike, both increased from 375 to 380. So that this 380 put wall, and I forgot to change my cursor size. Give me just a moment and I'll make this a little bit easier to see. Okay, so that should help. So I'm talking about the 380 put wall and the 3,800 put wall being in play, and especially the 380 put wall. And all the volume is concentrated between that level again and the volatility trigger. And shifts in levels, so I talked about the S&P 500, the put walls, SPX coming back up to 3,800, and SPY coming back up to 380, and then the QQQ volatility trigger dropped slightly from 280 to 270, and the call wall dropped pretty significantly from 310 down to a more appropriate level at 274. So that's what's in play today, the playing field. And let's take a look now at the S&P 500 charts, and we'll see the levels and the absolute gamma levels. So this is the SPX absolute gamma levels, and the black lines above the zero line is call gamma, and the teal lines below zero are put gamma. So there's the first significant level at 3,800, and that is the put wall for SPX. And then here is that 38.35 call wall strike that we've been talking about all week. Again, that's the short strike, short call of the JP Morgan collar. And then there's where is that? Here, the 38.50 level, which has been important resistance this week. And you can see that's a pretty significant level as well. 3,900, and then 4,000 remains the absolute key gamma strike or absolute gamma strike, and that's the strike with the largest absolute gamma. So that is the playing field for SPX. And for SPY, 375 yesterday, that was the put wall, and now the put wall has jumped up to 380, and that is also the key gamma strike. So the put wall is the strike with the largest net negative gamma, and again the key gamma strike is the strike with the largest absolute gamma. So that's a very significant level. And there's 385, the volatility trigger is just below that at 384, and then the call wall at 390. So there's the playing field in the S&P 500. Now let's take a look at some of the data. This is from today. And as usual, I'm going to take a look at gamma notional. And this shows market makers' position on the gamma curve. And today, gamma notional for both SPY and SPX became less negative. So yesterday, SPX gamma notional was minus 651, and today it has moved up to minus 304. And yesterday's SPY was a pretty significant minus 2326, and today it's minus 1594. And there's a question, how do I use that info? Okay, so gamma notional does not have any implication for directional bias. It has an implication for volatility and expected range for the day. And again, this is showing market makers' position on the gamma curve. Now, it could, in certain instances, have a bearing on directional bias, like at an expiration or ahead of a key event, like an FOMC announcement or an economic data report, important one like CPI. And I've talked about that in the past, how that can lead to a put-Vanna rally. So let's just talk about time or an instance other than that, just every day. And this is indicating that when traders are long puts, market makers are short puts, and that is in a negative gamma environment. And we'll look at the Vanna charts, and the Vanna chart shows this graphically. In a negative gamma environment, market makers have to hedge in the direction of price. So since they're short puts, if SPX and SPY drop, market makers' delta exposure increases. They want to remain delta neutral, so they have to sell futures to hedge their delta exposure. So they're trading in the direction of price, and as price increases, they can buy back their short futures. So they're trading in the direction of price again, both up and down, and that tends to increase volatility with market makers enhancing the price action in either direction. So it's important to know how market makers are positioned on the gamma curve. And again, right now, they are negative gamma it's in a negative gamma environment, and they will have to trade in the direction of price to hedge their delta exposure. So the implication is just for expected range and volatility for the day. And we can, just to illustrate that, let's take a quick look at let's go back, and this, so I was looking at gamma notional, and this Spotgamma gamma index is related to that. So as gamma notional moves, so does the Spotgamma gamma index. And we can look at this chart right here, and I think we looked at this yesterday, but this helps to explain. This is the zero line, and what this is showing is the one-day return. It's actually the one-day forward return, positive above and negative below, and then that's the vertical axis. The horizontal axis is showing the Spotgamma gamma index, and you can substitute gamma notional in here. So what this is showing is in a negative gamma environment, notice that the expected range for the day, plus or minus, increases, becomes more volatile. So it doesn't imply direction, it just implies volatility. Okay, and another way to look at that is the Vanna charts, and this shows market makers' delta notional or delta exposure with changes in price, and that's shown on the horizontal axis, and implied volatility, and that's shown by the green curve. That's the current expiration, and that is showing the Vanna effect. And then the black line shows the changes in delta exposure as time passes, and that's the next expiration, and that's a charm effect. So I think this is a very easy to look at visual representation of what I was just talking about. And what this is showing is that as price decreases, market makers' delta notional, delta exposure increases, and they have to sell futures to hedge their delta exposure. And I just drew a line, kind of an approximate line through this green curve. It's usually parallel to the black curve, and that is showing, again, market makers' delta notional, delta exposure. So this, a curve sloping up from right to left, is typical in a negative gamma environment. And we can look back and see how that has changed over the last couple of days. So just looking at yesterday, you can see how that has shifted down, that curve, and I just look at the slope of the line. And the same for SPY. Yesterday and today. Okay, let's take a look at, that's my positional analysis. So based on this, I'm looking for a volatile day, wider trading range, but less than yesterday because of the decrease or gamma notional becoming more positive. And let me just check for questions on YouTube. Okay, David said something about, I guess, bond market related to the news. No, I don't know. The only thing that I saw was related to that the Fed repo market. Okay, so let's talk about the 38.35 strike. Now I said, Truman asked, when traders are short puts, market makers need to hedge with long puts. So what I think I said, what I meant to say, is that traders are long puts and market makers are short puts. So traders are buying puts from market makers. Market makers are selling the puts. That's a positive delta position, and their delta exposure increases as price drops. So they have to sell futures to hedge their delta exposure. All right, so what I want to look at now is, well, let's take a look at a note first. This is from the AM Founders Note today, Spotgamma AM Founders Note, noting that, so they've been talking about this JP Morgan caller related flows all week, and talking about flows and other large year-end flows entering the market today, and further compounding that is holiday liquidity, and that's certainly what it looks like to me. And so indicating that the 38.35 pin, which was definitely in play today, is gone now. And so let's take a look at that, and just for follow through, just because I've talked about this all week, I want to kind of wrap it up today. So and that's not what I wanted to look at. Let me just open up the correct one. So I started looking at these on the 27th. So on Tuesday. So this is the SPX call gamma. This is taken from Thinkorswim and showing the gamma curve for the next 4 weekly expirations. And the pink purple line at the top is the 1230, this expiration. And then the next 3 lines are the next 3 Fridays after today. So that is the January 6th, January 13th, and then January 20th. And this is emphasizing, and notice this peak is right at that 38.35 SPX level. And so this is from the 27th. And what we'll see is how the influence of this, well, just to point out that JP Morgan is short this strike. So market makers are long. So this is, in this area, more of a positive gamma dynamic comes into effect, where as price increases, market makers' delta exposure increases, and they have to sell futures as price rises, and the opposite as price drops. They have to buy back. So they're, in this case, they're hedging against price action, and that can tend to cause a pinning at this level. So that is from the 27th, and we'll see how the influence changes from day to day, becoming stronger at the peak and weaker at the wings. And by the wings, I mean further out away from that strike. So that's the 27th. And there's the 28th, the next day. So notice how the peak went from around 0.06 to 0.007. So that's the 28th. There's the 29th. So the peak is increasing while it's becoming more narrow. So the influence of this strike is decreasing further away from the 38.35 level. And then finally for today, and notice how narrow it is. And each of these plots, I plotted the same range from about SPX 3300 to 4300. So notice how steep the peak is, but the influence. So again, Spotgamma is saying they think the pinning effect of this strike today is gone, and it was certainly in play yesterday, as we'll see. So yesterday, and let's go back to one thing I want to take a look at is this is from yesterday. This is from 12/29, the AM Founders Note for Spotgamma. And they posted this chart. So I just want to make sure everybody knows this is from yesterday. And now I've got well, this is about the same size. So we can go back. We'll just look at it here. And what this is showing, this is the 3,800 strike. And that yesterday, remember the put wall was down at 3,700 yesterday for SPX. So further down, but this is the SPY put wall. And up here is the 38.35 strike. So this is the area of interest. And the reason I'm showing this is just to show how important it is to keep track of these levels in SPX and SPY and how they have such a strong influence on price action in the S&P 500, including the ES futures. So the point here is showing above, well, let's start with below. So starting below at the 3,800 level up to 38.5, they're calling for pinning flows. That means they're looking for, with price SPX above that level, they're looking for price to pin at the around the 38.35 level. And again, this is all SPX levels. And then above that, they're looking for selling pressure at that level, down back to 38.35. So pinning flow or bullish buying pressure below that level down to 3,800, and then selling pressure above that level, leading to a pinning effect. So that's what Spotgamma was calling for yesterday morning. And then let's take a look at how the day played out yesterday. And this is that's the 38.35 level, the call wall, the 3,800 level, and then this is the ES 38 SPX 3850 level. So all those levels were definitely in play today, and I pointed this out yesterday. The reversal, I got drawings all over the place here. So I pointed this out yesterday, the reversal higher at the 3,800 level, and this happened before the RTH open. And notice the bullish order flow up to 38.35 and above, and then pretty much stops and is contained by the 38.50 level, which was actually noted as a significant resistance level yesterday in the AM Founders Note, and then ultimately by the 384 SPY volatility trigger. So again, just an illustration of the importance of keeping track of those SPX levels and their significance on price action of the S&P 500, whether that's SPX, SPY, or ES, whatever you trade. Those levels and the influence of the market, options markets on the S&P 500 was definitely important yesterday. All right, let me check for questions. Oops. Let's go take a look at Bookmap. Let me check for questions in YouTube. Okay, no questions in YouTube. And Panamats, just stick with it. It takes time to understand. You know, the key point here so far is that the options market has a strong influence on the S&P 500 most days, and it certainly did yesterday, and that was a clear illustration. And you know, I think we're seeing it again today, the significance of the SPX and SPY levels for trades in ES. Okay, and there's FTW Trading Group posted news about the JP Morgan rolled their collar to the March 30th. So that is the March quarterly expiration. So those are the strikes. Okay, thank you. All right, so let's take a look at some setups here. So let's go to Spotgamma Hero. And this is the ES. So this is for today. And what this is showing is, and this is pretty typical of the S&P 500, as price drops, traders start taking bullish positions. So they actually started buying calls at the open and continued as price dropped, and then all the way to price went up to, you know, it looks like this is shown in terms of ES or SPY prices here up to this level. We'll take a look at Bookmap in just a moment. So this is a divergence setup with calls. So traders were buying calls, and this is most likely all SPY calls. And initially they were buying puts and then started selling puts, at least for a portion of the move higher. So it looks like primarily calls were driving this price action. So for anybody looking for a divergent setup, there it is. So that is the morning setup. Let's go take a look at Bookmap again. And there's that setup in the morning. So the reversal happens above the put wall, but the order flow shows it pretty clearly. Note the pink dots, the aggressive sellers, taking price down to the liquidity here at the 3830 level, the ES 3830, and then the green dots coming in, the aggressor buyers come in as traders are buying calls and move price up to the volatility trigger. And at the same time, these lines in the subchart are showing iceberg orders, and that is the blue line, and I'm showing these in summation mode. And also there are some buy stops firing, and that's shown by the yellow line. And then the pink to dark blue line shows cumulative volume delta. So they were rising slightly, and then this large order, iceberg orders come in, and then this 522, those are buy stop orders, fueling that final move up into the volatility trigger. So there's the setup in ES. Let's just go back and check. Make sure we have the correct time alignment, and yes. So that move higher starts around 9:50 before 10 a.m. and goes up until about an hour later. Let's just go back and check. So yeah, 9:50 it starts, and then the final peak is just around 10:50. And that's really when traders stop buying calls. Let's take a look at the total signal again. So looking at the purple line, that's puts and calls, and that is for SPY and SPX, but most likely mostly SPY, and we'll take a look at SPY in just a moment. So I'm looking at Hero, the purple line, making an equal high there, and then making a lower high as price is dropping. So options trades driving price higher, then showing the peak, and then starting to fall as options trades become negative delta. Okay, and there's a question about iceberg orders. Let's go back to Bookmap. So this, again, I have my subchart stops and iceberg shown in sum mode. So this spike just shows a big order here, if that's what you're asking, and that is that order here. And there was one other large order here. I've got let's see if I can zoom in on this a little bit. So that was about 3,000 right there, and you can see by the sloping, the increase in the blue line. And the yellow line, again, is summation mode, and it's showing, so this is the MBO market by order indicators from Bookmap, and there are two components, the subchart and the on-chart indicators, and I look at both. So I have the subchart indicators in sum mode, and that's showing this cumulative effect of stops and icebergs. And then I have the events shown on the on-chart indicators, and that is shown um, here. I have the icebergs shown in blue, this uh, blue, and let's see if I can find a sell iceberg. And I don't see a, let's see if there's one further down. I'm looking for an on chart, so here's one right here. Oops. See this? Oops. I got a horizontal line again. Sorry about that. All right, that kind of little wavy icon with the teal, or the, I'm sorry, the pink purple color, that is a sell iceberg, and you can see the decrease in the blue line there, showing the same thing. So that is those are the iceberg orders, the blue and the pink purple, showing on chart, and then the blue line is showing the light blue line is showing icebergs in summation mode. So showing the same thing, just cumulative effect in the subchart and the events on the on-chart indicators. And now for stops, that is shown by the yellow line, and these are just my colors. This is what I have chosen to use to look at. And I have, so these are sell stops, yellow line dropping, and you can see these red circles here, 158, 125, 135. So this is a little bit off topic. There's not much to look at, so I'm spending a little bit of time on this. And I refer you to other Bookmap webinars. There's plenty of information. Bruce talks about it. Of course, Scott Pulcini talks about it. He does an advanced webinar every Thursday, and then Bruce does his webinars Monday, Tuesday, and Friday, all at 10 a.m. So you can watch those or look at the Bookmap YouTube channel for more information on stops and icebergs. So let's go take a look at SPY. And I want to look at Hero. So pretty much the same as ES, and that has been the case recently. It looks like SPY options trades driving, and actually there's been an issue with SPX and Hero, so I can't see that. Oops. So same thing. Traders buying SPY calls. This is just like the ES chart. So another divergent setup again in SPY, ES, however you want to trade it. SPY shares, SPY options, ES futures. And just quickly, there were, I didn't see much today. So end of the, end of the week, end of the quarter, end of the year, pre-holiday trade, pretty light, especially compared to yesterday when there were so many strong uptrends with traders buying calls in many stocks. So Moderna, pretty strong correlation between price action and options trades. Let's take a quick look at Bookmap. Moderna. Right, let me check for questions in YouTube. And Jonathan asked, have you heard of the JP Morgan collar trade? Yes, I've been talking about it all week and talked about it earlier today. Glad you're here for a live session. And I talked about it earlier today and all last week. And my sessions on YouTube are recorded, so you can go back and look at the beginning of the session today or any of the past sessions this week. I've covered that extensively. Okay, so this is Moderna. Nice steady uptrend, a lot of pullbacks, made for good entries here. And let's go look at, so again, strong correlation as usual between price action and options trades in Moderna. And the next was Microsoft. And today, although there was not much range, there was also strong correlation between price action and options trades, although it seems to be lagging just a little bit on this uptrend. Let's take a look at Bookmap. And really the only notable thing here was this 240 key gamma strike and the liquidity up there being a potential target if price had continued higher. And as usual, Netflix is pretty volatile. And I don't believe there are any gamma strikes. I didn't get to update the my cloud levels for all the stocks. They were the Equity Hub updated late, so I didn't have time to get all those levels in. So anyway, there are liquidity levels at 290 and 295 in play. And let's take a look at Hero. Netflix. And Netflix is another stock that has high correlation with options trades and price action. And QQQ. And this is one that I wanted to highlight. So remember, we saw a call divergence set up for a reversal higher in SPY. And the same thing here in QQQ in the morning. So traders buying calls from the open price dropped and then reverses higher. And let's go take a look at Bookmap now. So there's the reversal higher in the morning session. If you were fast, you might have caught this first reversal. As aggressive traders, see the green dots come in there. Let's just bump these dots up just a little bit. So you can see the buy sweep and the green dots coming in. And then the first pullback to the 263 level. And then the 265 key gamma strike in play there, and that was the target. So really the QQQ trade and the SPY trade were the best setups that I saw today. So there's the QQQ trade. Let's go back and take a look at Hero once more. So again, there's the long entry. First the divergence, the sharp increase. Both traders buying calls and selling puts, and then they continue to buy calls as price reverses higher. Okay. And there's a question, let's see, a comment from Panamets. I was chasing it, gave up. I thought the price was too high. I don't know, are you referring to QQQ? Anyway, in general, I don't use fundamental analysis. I use position analysis. So ES, whatever, maybe, maybe relative to, fair value for the day or something like that. But I only consider price too high if it's trading above the call wall. So that was the case yesterday, is price was trading above the call wall, and the ES chart that I showed for yesterday showed what happened when price was trading above the call wall. It was kept reverting back to close to the 38.35 level. And again, those are SPX numbers. Okay, so there's the setup in QQQ, pretty similar to SPY, another good setup. And finally, let's take a look at Tesla. And Tesla's another stock with a very active options markets. And there's a question about numbers in the QQQ block orders. And those, the only way that you can come up with those numbers, and I don't recall noticing a block order. You would see a vertical line in a block order. Well, I'm not looking at Hero on Bookmap, if that's what you're talking about. I have turned that off. That will be discontinued at the end of this year. So today's the last day for Bookmap Hero, and I've taken it off my charts for some time. So this is the only version of Hero that will be available in 2023. And all right, so I don't understand your question. The number in the Bookmap chart. All right, so let's go back to Bookmap. All right, so I assume you're referring to these numbers. Okay, those are the absorption and sweep indicators, and there are two sets of indicators: absorption and sweeps. So absorption is passive orders. Those are resting liquidity, and they are showing again passive buys and sells. And I have those numbers that I use, the numbers that I chose. See this pink line here, pink number is a passive sell absorption. Just disappeared, so a bigger number came in. And then for buy sweeps and sells, I use green and red. So this is a buy sweep here, and typically you would see a pink absorption at the end of a green buy sweep. So what I'm showing here, these are the absorption and sweeps indicator. All right, then we wanted to look at Tesla, and then we'll wrap it up. And for more information, more questions about the absorptions and sweeps, again, I refer you to the Bookmap YouTube channel. Take a look at the features and components playlist. That is, not my focus. Again, my focus is options. So this is Tesla. Very fast move up in the morning. So this, again, see all these little green circles here? That's buy sweeps heading up into the liquidity at 124, and then this number. So those are aggressive buyers. Those are buyers on the buying on the ask. So they're again aggressive market orders. And let's just, so here then these pinkish purple dots, and actually this number right here, this pinkish purple number, is showing the absorption. So anyway, the setup was, let me clean this up a little bit. Price making lower highs. Potential entries, that sell sweep, the red dots, and then the aggressive sellers are coming in with the, you can see that with the pink purple dots, and the same here. And let's go take a look at Hero. And really the level in play is the 120 key gamma strike for the move down. Let's go look at Hero. Oh, that's QQQ, sorry. Tesla. So if all else fails, if you can't find anything to trade, Tesla is always a good go-to, and it always has a very strong correlation between options trades and price action. and it's rare to see a divergence in Tesla. Almost always trend confirmation, 1-to-1. So market makers are hedging options trades in Tesla immediately. So there's that short setup. Let's just see if we can gain any information by looking at puts and calls. So it really looks like, at least right now, I'm going to change this to see if that adds any more clarity. And yeah, it does. So I just changed the rolling window, and I can, so this is now, instead of a 1-day look back period, it's looking back just 30 minutes. So it's like a shorter moving average, and showing that here traders were selling calls and buying puts. So this reveals a clear divergence setup for shorts here and here. And let me check for any final questions. Okay, so again, all else fails, go to Tesla. You can always find something to trade. Let's go to Bookmap. So there's the setup. And let me just check for any final questions on YouTube. And Jonathan asked, are the put and call walls dynamic throughout the day, or is it static? The levels may be changing during the day, but there's no way of knowing. That information, most of the data that, or most of the information that Spotgamma provides is based on open interest, which is updated once daily, sometime during the night. So all those levels are generated based on that information. So the information that we have is just a snapshot in time of basically the close from the prior day. So that is all the gamma strikes, the 5 key daily levels for equities, as well as all the gamma levels in SPX, are all generated once daily. Okay, so that's it. My time is past. I need to wrap it up. So I want to thank you for watching. Thanks for your questions and comments. And hoping for a good start to next year as the traders come back, and markets hopefully will see some nice volatility next year. So again, thank you for watching. Thank you for your questions and comments, and I will see you next year. Thanks again. Bye.